Today's video, should you bet your entire life saving on cryptocurrency in order to be the next millionaire? Hey guys, welcome back to my channel. I'm Conrad, for those of you guys who don't know. In today's video, we'll be talking about what approach should you have towards investing from 16 until 21. Okay, we're going to start off by looking at some problems we face as 16 to 21 year olds. So the first problem is we don't have enough capital as youngsters to be able to start something. So then what happens is we go and lend money from a bank at an interest rate we can't afford because we don't have the leverage to negotiate a better rate, and we just indebt ourselves. Secondly is we try and bet all our money on things that are going to give us short-term returns and like heavy gains, 100x, 200x, that type of stuff. Thirdly is all of us are so impatient. This mindset of you need to be successful by 30 in order to have a good life is so ingrained in us that it's actually funny. Gary Vee, a popular entrepreneur that I follow on Instagram, I'll link his details up here, actually makes videos about this where he dismantles the idea that we need to be successful by 30, that we need to have life figured out as a 21-year-old, because that is so far from the truth. I mean, how can you expect someone that's going to live until 80 or 90 because of modern medicine to know exactly what they're going to do in 21? That's like expecting a 5-year-old to be able to read and write an essay. That just doesn't make sense. So let's get into some of these unpopular opinions when it comes to investing in our generation. And let's talk about investing. All things investing. Let's get into it. So whenever we think about making money, we need to think about the level of risk that is being involved in the transaction. And we have 3 levels of risk. We have low risk, moderate, and high. If we look at the example of the lower risk, it is something like a bank account. And then we think about a high risk, something like crypto, which is extremely volatile, something that you don't know if you're going to get your money back or not. Even some stocks are extremely volatile. So risk is defined in financial terms as the chance that an outcome or investment's actual gains will differ from an expected outcome or return. Risk includes the possibility of losing some or all of an original investment. Now that we're talking about risk, let's talk about how our generation perceives this. They think that cryptocurrency is the way that they're going to make all their money. And there's a flaw in that because it is high risk. And if something is high risk, that means is that you're not sure if you're going to get your money back. There are trusted sources, for example, the stock market, where you can see there's a period of from the 1900s until now that if people invest their money in the stock market, they receive an average of 10.5% return on investment, and it is a proof source of investment. I've also invested in crypto, so I really believe that it's something that will multiply or increase in the future, but that's another topic for another day. And I know the FOMO is real because we've all heard about those stories where someone has made 1,000x or 2,000x of their capital amount, and then you think, you know what, I'm gonna miss this train. I'm gonna lose my opportunity to make money. And that's not true. There's so many other ways to make money. People just think that you need to invest in something to make a return. According to Tony Robbins' book, Unshakable, I'm going to put it up here. One of the main elements of building wealth is your mindset. It is yourself. And Peter Malik, who is a successful financial investor, actually goes to the extent to not even look at his investments in times of difficulty. Investing is all about the long term. Don't be fooled by people telling you that investing is a short-term thing and you're going to make your money back within 3 months. That is really the case. And you ask most people, those who have invested in something and wanted to triple or double their investment within a few months, those are the people who get burnt. And the people who invest in a longer period of time, who actually do the research, those are the people who come out on top because of the power of compounding interest. So you're sitting there and you're asking, what is compounding interest? Well, my friend, it's something that I discovered, and it is mind-boggling. It really is. It is essentially interest upon interest. Let's say you invest $5,000 in the beginning of the year in an index fund, which return is 10.5% annually. If you look at the time period, the first year you would have $5,525. After 5 years, you would have $8,237. After 15 years, you would have $22,356. After 20 years, your amount will be $36,800. And after 25 years, that amount will be a whopping 60,700. So you see, from year 20 to 25, which is just 5 years, your investment nearly doubled in size. And I know you're sitting there and thinking, no, Conrad, this is unrealistic. I don't believe this. How can you say this? Well, I'm not being unrealistic. These are actual numbers. If you look at the S&P 500 average return rate from the 1920s until now, the average return rate per year is 10.5%. So you see that if you invest long term, and if you've got a long term mindset, it benefits you a lot more than just investing in the short term. And I'm not saying that you can't be successful in day trading or speculating, because there are lots of people who are. But I'm saying that for the average person who doesn't know much about investing, it's smarter to invest in a company or an index over the long term than to invest in some get rich quick scheme, if you get what I'm saying. So in conclusion, next time when someone says, give me $100 or give me your life savings to invest in an altcoin or in an NFT and I'll make your money back and pay you double, be skeptical, because you've heard it here that it's better to invest in the long term, because as you see, in the long term things are rooting for you, but in the short term you're battling the market, my friend. It's like going to a casino and putting all your money on black or red and then hoping you're gonna win. Doesn't make sense. You know, you have a 50% chance of winning. Okay guys, thank you for watching the video. I hope you found today's video interesting. If you have anything that you would like to add to this, please comment it down below and let me know. If you have any questions, also please comment down below. If you'd like to watch another video, I'm going to link it up here. Please watch another video. And if you love the vibe of this channel, please do subscribe. It will mean a lot to me. Until next time guys.